All right, thanks for joining us. My name is Tyler Langton. I cover the precious metal stocks at JP Morgan. To start off this afternoon, we have First Majestic Silver. The company has 4 producing mines in Mexico and Nevada, with silver accounting for about 80% of revenues. From the company, we have Keith Neumeyer, President and CEO. Mr. Neumeyer was the original and founding president of First Quantum Minerals and founded First Majestic Silver in 2002 and First Mining Gold in 2015. Keith?
I think JP Morgan needs to launch coverage on First Majestic. Hooray, hooray, let's do it. You heard that, right? Okay, let's go. So I talk about silver just a little bit before I get into the company. I'm not going to cover this section of the presentation in too much detail, but the miners in 2021 2020 produced about 750 million ounces of silver. This year, the number is likely going to be about 800 million ounces, just because of the COVID situation. Last year, the year before that, we're a little over 800 million ounces. So silver production's been in decline really since 2016. The ratio, and we're consuming 1 billion ounces a year, and we're mining less and less every year. The ratio's now fallen to 7 to 1. So for every 1 ounce of silver being mined, 1 ounce of gold being mined worldwide, we're only mining 1 ounce or 7 ounces of silver, which is a pretty shocking stat. Considering we're trading at over 70 to 1. You want to explain that to me, feel free. When I put the company together back in 2002, 2003, my thesis then, I came from a copper company. I'm a big supply demand fundamental, individual. And when I looked at silver, I was really looking at computers and cell phones and really the proliferation of electronics. When I put this company together, that's why I chose silver as a very important metal. I actually deemed it a strategic metal. That phrase has been picked up by others, since I've created it. But nevertheless, I look at silver as a very strategic metal. In the last few years, we've seen 2 industries come up. The electric car industry is consuming just shy of 100 million ounces of silver. Just to give you some stats, there's 1.4 billion fuel combustion cars sitting on the surface of the earth right now. There's 90 million cars produced every year, of which 5 million cars last year were electric. Now, with governments around the world wanting to remove fuel combustion cars from our streets by some say 2030, others say 2040, that's a lot of cars to replace. Electric cars obviously need to be produced at a much faster rate than they currently are in order to meet these government demands. At 100 million ounces of silver in one industry growing, quite dramatically over the next couple of decades, that's going to take a lot of silver. Solar panels also around 100 million ounces of silver a year, and of course this industry continues to grow. So in recent years, we now have 2 industries that are consuming over 20% of the world production of silver, and that's why above ground supplies are diminishing so quickly, because of the deficits just continually occur every year and have occurred every year for the last decade. And it's something that the investment community is not picking up on. These gadgets, we take it for granted. We'll be mining waste dumps. All the toasters and televisions and refrigerators and ovens and all the things that we've thrown away over the last several decades, we're going to have to go and bring them back out of the ground in order to get the necessary copper and silver out of these appliances that have not been recycled and are sitting in waste dumps worldwide. Because I can tell you, the mining sector is not prepared to meet the current demands that the governments are putting on the sectors to eliminate the current electrification methods of the planet. The ratio, of which many of you probably follow. Now, getting into First Majestic. With the recent acquisition of Jerritt Canyon, we're approximately 55% silver, 45% gold. We have 4 mines, 3 of which are in Mexico. One is in Nevada. We've got a very, very large land package throughout our portfolio. And of course, our goal is to become the largest silver producer in the world. We're not quite there yet, but we still continually make moves to try to get there. Our market cap is in the mid $3 billion range. Treasury is as strong as ever. The split up of the shareholders are there. You see Eric Sprott, largest private shareholder or largest shareholder. That's a result of the Jerritt Canyon acquisition, which him and his group owned, which I'll talk about in a few minutes. So the split of around the assets, so the red dots are the producing mines. San Dimas is our largest mine. I'll talk about that, obviously. Santa Elena, lots of investment going on there, lots of growth happening there over the short term. La Cantata, and then Jerritt Canyon, our recent acquisition, and our first investment outside of Mexico, which is something we're quite excited about. 2021 will be a record year. 2020, we did have a dip. That's COVID related. We actually came into 2020 expecting to have a record year. Obviously, that did not occur due to things outside our control, but we've got everything back on track, and we're expecting to have a pretty bang-up 2021, and 2022 is looking to even be a better year with all the investments currently underway. Our guidance, which we put out in July, we put guidance out twice per year, January and July generally. This is our first guidance we actually put out on Jerritt Canyon. And that was just the pro rata number. That was not an annualized number. That was just under our portfolio. The asset produces about 110,000 ounces of gold. Without Jerritt Canyon, that number would have been 165. That's with expanded exploration and development, mostly at Santa Elena and San Dimas. With the addition of Jerritt, we added quite a lot to exploration and development, which I'll touch on in a little bit. The Ermitaño investment comes to an end at the end of the year, and that's going to be adding substantial production to the Santa Elena operation, which I'll cover. So we're expecting this CapEx number to drop in 2022 and level out at unless we decide to do other expansions at San Dimas or further expansion at Santa Elena, but that's not currently in the cards. And exploration is going very well. We've got 26 rigs going on. We're replacing all the ounces we're mining, which is always a great place to be as a mining company. We've got 3 rigs at Jerritt right now. Great results we're getting early on in that drill program. So drilling all around, we're going to be putting out a new PFS on Santa Elena at the end of the year. We'll be upgrading the Jerritt Canyon 43101 at the end of 2022. So, exploration has become a real important part of the business. And touching on Jerritt Canyon, so, when we look at assets, we get asked the question, why did you go outside of Mexico into Nevada? Why do you buy gold versus silver? This asset checked every box except the silver box. When we look at assets, we first off, is there expandability? Can we, with our capital and with our expertise, can we expand the operation? Does that mean, so that's life of mine and that's resources? And in both cases, the answer was yes. Can we reduce costs? And we feel that we can. So it didn't have the silver, but it's just such a compelling asset for us that we with the mill only operating at 50% capacity, this asset has not had serious investment in development or exploration for almost 2 decades or thereabouts. It used to be run by Freeport back in the 80s. It was a series of open pits. They got depleted at those metal prices. Today, we think those pits can be reopened at current metal prices, which we're now evaluating. And we're expecting to double the production here over the next couple of years. We're actually expecting to have in 2024, we're expecting to produce 200,000 ounces of gold compared to about 112,000, 110,000 ounces this year. So we've got high expectations for this asset. There's only 3 roasters in the state of Nevada. We've got 1. Barrick and Newmont have the other 2. So to have a roaster, in our portfolio is a great thing. We could do toll treating. We can do lots of stuff. It really gives us a ton of flexibility to have that, as part of our portfolio. That roaster apparently has a 6,000 ton a day capacity. I don't think it's ever reached that. I believe it's reached 5,000 tons, but the mill has got basically a 4,500 ton a day capacity. So we don't ever expect it's going to hit those kinds of numbers, but we do expect to get the mill up to 4,000 tons per day by the end of 2023. And what are we doing short term? I talked about costs. Now this is, this company, Jerritt Canyon Gold, prior to us buying it, had really no expertise within the company. It was basically a mill sitting on the surface with a management team that were just at the mercy of a contractor waiting for the delivery of ore. And the contractor, in my view and our view, was quite expensive. And we, as a mining company, we do all that ourselves. We have our own internal expertise, and so it's a matter of us duplicating what we've done at the other assets at Jerritt Canyon. So we removed the entire 2 top layers of the management team on day 1, basically. Over the first couple of weeks, anyways, and we've now replaced them with our own team. August actually was a record month of production, now dating back at least a decade as far as we know, and quite likely even longer than that. So we're getting early success. These 2 mines, the SX mine and the Smith mine, as you can see, they're 2 separate mines and they're 600 kilometers apart. We're joining them underground, and we're halfway through that. By the end of 2021, we'll have joined these 2 mines underground, which will reduce the underground fleet and hopefully the manpower, and of course reduce the costs. We'll also use that drift as an exploration drift, which our guys are quite excited about. Regionally, during our due diligence, we've found things like this, and by just one point, this is ounces per ton, by the way. We generally report, we always report in grams per ton. So all these numbers will be updated to grams per ton. So multiply these numbers by 32 and you'll get your grams per ton. And these are targets that we're going to be going after over the next 18 months. We've already started. We've got 3 rigs going right now, and early success, as I said. It's pretty exciting. The life of mine here, the ounces are going to grow quite nicely over the next couple of years. These are the open pits. There's a variety of open pits. We're focusing on 3 of them right now. We're expecting to bring at least 1 or maybe even more online in 2022 to supplement the underground feed. And at current metal prices, these ore bodies are economic as far as we're concerned. Need more work, need more drilling, more definition, but that's back of the envelope, and that's our view. So going to San Dimas now, we've been improving this asset since we bought it back in 2018. It is our largest mine. It's a cash flow engine for us. We're not doing much in the way of investment here. With the Jerritt Canyon acquisition, it's really changed our focus. We had hoped to get this mill up to 3,000 tons per day by the end of 2022. We may still get there. We're up to 2,400 now from about 2,200 a year ago. So it's an incremental thing. It just takes smaller improvements here and there, but it's doing very well, and it's really a cornerstone of our business. This is a very prolific part of Mexico. 70,000 hectare land package. Just a monster. This mine will be operating for decades and decades and decades into the future. La Encantada gained status quo. We're not going to be investing money here. This is really 4th down in our priority list. But it's a cash flow, machine. It's doing quite well, and it's been, doing well since we've owned it. We would like to spend some money here, but maybe increase its capacity a little bit. But we're not going to be doing anything in the short term. The investment's really been here. Santa Elena, when we discovered the Ermitaño back in 2016, which I'll get into in a few minutes, we really decided to modernize this operation. When we bought it, some of you may recall that the recoveries here were 65%. back in October 2015 when we added it to our portfolio. Within 6 months, we had the recoveries up to 80%, which really changed this mine quite substantially. But that wasn't enough for us. We had to throw a bunch more technology at this, and which we did. And today, recoveries here are 94 to 96%. The costs are a little bit, has been increasing over the last couple of quarters just due to the thinning of the Santa Elena vein. But that's actually now improving. This last quarter was actually much better than these numbers. But the Ermitaño discovery, which is really going to improve this operation dramatically, is here. So that red dot, which is 4 kilometers away from the main Santa Elena vein, and that's the vein that all that ore has been coming out of, and the ore is narrow, or the vein is narrowing, which is adding to those costs. But with this discovery of Ermitaño, you'll see here the grades are 10 times higher than the grades of the feed that's going in to the mill at Santa Elena. Actually, the 40% of the feed, which is coming from the dumps at Santa Elena. And I can't go back. Oh, maybe I can. But you see many of you probably have heard of Silvercrest. That's the cheapest property in the white there. We surround them, of course. And we've got a couple of rigs in the green area, Los Hernandez, a few kilometers south of the cheapest. We've also got a couple of rigs in the pink area, and we've got 4 rigs in the blue area. We've actually now, looks like we've discovered another ore body, which is about 600 meters west of this structure here, which is pretty interesting. Still early days. We don't know really what it means yet. But, in our view, this mill is going to be, filled for, several decades into the future, just due to the prolific nature of this land package, 100,000 hectares of land, in a great part of Mexico. And I see I've only got 2 minutes left here. There's some infrastructure that we're building. So right now it says 50 to 60,000 tons of ore on surface by the end of the year. We're now at about 35,000 tons currently, and we're now doing test mining. We're actually feeding parts of it through the mill, and that'll be coming into the mill as of Q1 2022 on a full-time basis. Grind size key for us. This HIG mill was really, our claim to fame. This was the first ever HIG mill installed in Latin America. And it's still running, of course, today. And this is really what gave us the 95% recoveries at Santa Elena. We'll be installing this throughout the business. And something else you should look at is our energy footprint, something very important to us. You see over the years, we've been going green, obviously. We've now taken our last mine off of diesel, replaced with LNG. We're now in discussions with a hydrogen company. We're hoping to actually, over the next couple of years, even improve this even further by reducing the diesel consumption through the use of hydrogen. And we're in early stage discussions regarding the development of that technology. The LNG plant we installed at Santa Elena, pretty big operation, supplying 12 megawatts of power to Santa Elena, taking our last mine off of diesel. And then our purity, obviously, short position, some further notes, our dividend. So that's it, I guess. I'm out of time. Is that negative?
Nope.
No, I got 10 seconds left. 5 seconds per question.